Imagine waking up and discovering you can't withdraw your money from the bank. No ATMs, no tellers, no way to access a single cent. That actually happened in the United States in 1933, when President Franklin D. Roosevelt ordered every bank in the country to close. Why did he do it? What was going on? And the most unsettling question, could it happen again today? Block 1. The context? The Great Depression. The banking crisis didn't start in 1933. It had been brewing for years. Let's rewind to the Wall Street crash of 1929. Small banks collapsed under the weight of unpaid loans. People began losing trust. Bank runs. Everyone rushed to withdraw their money at once. Simple explanation. The fractional reserve system can't survive if everyone demands their cash at the same time. Result: thousands of banks had already failed before the official shutdown. Block 2. The Panic of 1933. By early 1933, the US was teetering on the edge of collapse. People hid cash at home, buried bills in their backyard. Rumors spread, my bank's closing tomorrow. We need to pull everything out. Banks fell like dominoes. One collapsed, dragging others down with it. Roosevelt took office in March 1933, inheriting a nation that had lost all faith in its financial system. Block 3. The bank holiday. And then Roosevelt did the unthinkable. He shut down every bank. On March 6, 1933, he announced a nationwide bank holiday lasting 4 days. No bank could open, no customer could withdraw. The goal: stop the panic and give the government time to assess which banks were strong and which weren't. Clear explanation: it was a confidence reset. Public reaction: fear, rumors of confiscation, widespread panic. Block 4. Roosevelt's masterstroke. What he did next changed the course of financial history. Congress passed the Emergency Banking Act. The government inspected banks. The healthy ones reopened, the weak ones shut down. Roosevelt's radio message: the only thing we have to fear is fear itself. The result? When banks reopened, people didn't rush to withdraw. They actually redeposited their money. The holiday achieved the impossible, restoring trust in just a few days. That shutdown marked the beginning of a new financial system. The FDIC, the Federal Deposit Insurance Corporation, was created, guaranteeing deposits. People felt protected. Gold. Roosevelt restricted private ownership, strengthening the dollar. Trust in banks returned, but at the cost of giving the government more control over money. Reflection. What seemed like a desperate move turned out to be a strategic masterstroke. The uncomfortable question is, could it happen again? Let's compare with recent crises. 2008, Silicon Valley Bank in 2023. Today, money is more digital, but trust remains fragile. Reflection. If a global bank holiday happened tomorrow with digital money and no cash, people would be trapped. Conclusion. The system relies less on vaults and more on collective belief. The day every bank in America shut down was a moment of panic, but also a lesson in power. Money only exists as long as we trust it. Roosevelt understood that and used it to save an entire nation. Next time you walk into a bank or check your payment app, remember, the only thing holding up that number on your screen is trust. If this story surprised you, hit subscribe, because here we reveal the economic secrets few dare to talk about. Drop a comment. What would you do if every bank closed tomorrow? Remember, information is power, but only if we share it. Like, subscribe and turn on notifications. Every video here is a puzzle piece to help you understand the present and prepare for the future. And never forget the lesson from 1933. Your money isn't protected by steel walls, it's held up by a fragile thread called trust. And history has shown us that thread can snap at any moment. The real question is, will you be ready when it happens again?